traders, so let's dive into this and pick up from the conversation of the free video, which is scanning for those dollar buys. Now that might seem ridiculous and a million miles away right now, but remember, what we have is going to be a continued demand for US dollars. And you'll notice that the list, if you watch the free video, we're going to talk about the levels here and the tactics and the premium, but if you watch the free video, you know that there's one glaring omission on the whole how to buy US dollars, and that is, Rod, when are we going to short the euro and buy the US dollar? And right now I can't. Right now this is a market that is not a double red. In fact, it's a yellow wave angle, which means I've got to wait for an overbought market again. I've got to wait for the market to get up into potentially this area before I can do anything. All right. So we'll focus on pullbacks on the dollar Canada, pullback buys, which is get long US dollar, get short Canadian dollar. We'll focus on bounce shorts in Aussie versus US and bounce shorts in New Zealand dollar versus US. So let's talk about one way to do this. And you might say, Rog, this is pretty extended. What's the chance we come back to the wave? We very well may not. We may not. This might really start to take off. So of course, we can look at the 13 EMA prop dots, which is the yellow. We can look at the 21 EMA prop dots, which are right there. That's going to be the green that we look at. And the other thing we can do is, it's more aggressive, but we can do what we call the 4 candle box, which in this case, because it's a downtrend, we're going to take the 4 previous highs, not the current candle, the 4 previous highs, and divide it by 4, and that is going to be our limit order to short. Okay, so there's a couple different things we can do, and that's definitely going to be a tactic that we will continue to watch. So we're going to look for more aggressive levels. One thing that you guys might look for is, where is their previous support? Maybe 6,200 on the New Zealand dollar US could be interesting. Let's take a look at the Aussie, perhaps even, looking at 327, so 63.27, or even 64.35. That area could be interesting. Where have there been previous support levels? What was once support becomes resistance. Those of you that are fluent in Fibonacci could pull a Fibonacci from even this last major move. What is the Fibonacci retracement between here and here? We can do that going forward once we start to see potentially a bounce. Okay, so that's one part of what I want to do, and just a continuation, and specifically the 3 tactics or levels we can use and what we're waiting for those US dollar buys. All right, moving on then to the energies. Gang, there is something that I definitely want to impart upon you, give you the confidence to focus on. And I think if you've been watching the free videos and now you're a member, or if you've even been a member for a week or a month, one of the things that I want to absolutely deprogram your mind of is this the top or is this the bottom, right? Those are not questions that are ever going to actually give you a trading career. Those are questions that are, I think, going to hurt you. Those are questions that are going to keep you from looking at the real trade. And so I want to do everything I can to, and my mentor did this for me, is, okay, Rog, we don't care if it's the top or the bottom. We know that there's a dominant psychology in the market. Let's focus on going with it. So what is the dominant psychology in the crude oil market? Right now, it's the potential for lower lows. Are we eventually going to get to a low in crude? Sure. We could look for different kinds of bottoming patterns. We can buy further dated out options. I mean, there are tactics to make bottom picking, a little bit more low risk and at least driven by a repeatable process, but I don't see it here. And I think we still need to focus on taking advantage of any rally to these 3 areas as an opportunity to buy puts in crude and even on any oil stocks that rally with this. Buy puts in those oil stocks or buy puts in the ETFs on the oil services, explorers, etc. Or energy ETF. So in a double red, we don't want to think about, is this the bottom? I want to take that question, and same thing with tops. Is this the top, right? How many people, and this is really to prevent you from getting steamrolled. How many folks tried to pick tops in any kind of uptrend, namely in currencies, right? We don't want to make a habit of doing that. We'll just play the trend until it reverses. Now, this is a pretty dramatic reversal in a number of these markets. No doubt about that. This is not typical. Clearly, it's taken a pandemic to get us here, right? It's taken a pandemic coupled with a technical breakdown, and then add to that now, again, the coronavirus situation kind of triggered this. We have an oil price war going on. I mean, those two, any one of those would have been a significant reason. Two of them at the same time is really a lot of pressure on strength in energies and strength in currencies. And I shouldn't say currencies, energies, indices, and specifically commodity dollar currencies. So it's taken a pretty major set of circumstances to get us here. Well, so that aside, how many times are you going to run into a dual pandemic plus oil price war? Probably not that many times in your career, but this is a terrific learning experience, and picking bottoms is not the conversation. So here, let me give you an example. How many folks thought, well, we've taken a pause at 110, maybe that's a bottom. Oh, we took a pause here at 90, maybe that's a bottom, right? Instead of, wow, did we bounce a little bit? If I'm going to do anything aggressive like picking a bottom, why not buy puts on a slightly bullish day? Do you see how the paradigm shift gives you a setup? Both are aggressive. Picking a bottom, gang, is super aggressive. So if you're going to be aggro anyways, why not say I've got a double red market and we've had an up day. And in that bullish momentum, if I'm going to do anything, I'll buy further dated out options in RBOB or UGA, right? So if you need to take that energy that's saying, I need to do something, rather than pick the bottom, ask yourself, well, if I'm going to be aggro anyways, why can't I do maybe a 4-candle box? Why can't I wait for an 8 or 13 exponential prop dot? Why can't I just take advantage of a single day or two of bullish momentum, and in a double red market where both the 8, 13, 21 are saying bearish and the wave is saying bearish, why can't I buy puts? That's the flow. It's going down. Does that make sense? So take that energy and rechannel it, right? Take that energy of this is the bottom and ask, oh, is this an opportunity to buy a put? That's really where I want you guys to get much more comfortable. And that's going to extend over to the indices as well. So let's take a look at the S&P and the NASDAQ. What is that mindset? What are those levels? Well, for those of you that might be new to the room, so let me say this. These kinds of environments, they're difficult. They're scary because there's the investor part of our personality and there's the trader part of our personality. And we have to separate the two. We have to put that investor personality on the shelf, and maybe you remind yourself, what was my time horizon for these investments? And am I doing everything I need to do to not succumb to sort of this passive investing? It's been a phenomena. It's never going to return to what it's been, because a lot of people are finally finding out what high concentration weighted problems mean and what it means to understand the makeup of your portfolio and what it means to not hedge, but understand global macro and incorporate those types of positions into your portfolio. Everything that I taught members back in 2018 when we rolled over and I said, look, we need to take a look at 30-year bonds. We need to get into GLD. We need to get into UUP and make those the cornerstone of our, at least that's what I was doing, right? I'm not here to give you that kind of advice. I'm not even, frankly, qualified to do that, but I can tell you what I'm doing with my capital. And that's what we did in Q3, Q4 of 2018, right? And that's usually going to be my playbook for any kind of panic-driven market. But here's the thing. By the time the panic ensues, well, finding those positions are going to be few and far between, right? So what we look for, and we've had this really nicely since then, is we've had uptrends in bonds. We've had uptrends in gold. We've had even uptrends in the US dollar. So we take a look at trends in other markets that are not going to be as connected the causation, the connection isn't going to be there to equities as strongly. All right. I don't believe in hedging, although I do realize that becomes kind of a natural hedge to be looking long the S&P or NASDAQ while also being long gold and bonds. But they both have legitimate uptrends. All right. So, we'll talk a lot more about this in the coming days and months. I get this is a scary time, but we want to focus on the trading of our lives right now. We want to focus on being nimble, being day traders. So anytime we have a rip, which is basically what I sent out when the Federal Reserve way back when cut 50 basis points, we said, hey, look, this is a game changer now. We are focused exclusively on the downside now. The Federal Reserve has lost control of this. They're doing their best. The market is going to start some price discovery that doesn't involve the Federal Reserve juicing the stock market. It's not going to involve epic historical levels of buybacks. It's going to involve the market taking a good hard look at potentially macro, and then all the things that the coronavirus is going to kind of rip the curtain back on. And those are the things that once the market can come to terms with that, not to mention we need clearly some kind of progress being made on the way in which we are handling this, right? This is just basic. This is what the market's saying, not me. This is what the market is saying. We don't believe we have a handle on this. Whether it be treatment, we're nowhere near. Whether that be prevention, we're still battling with that as curfews. And the government is saying, hey, no more than 10 people at a gathering, right? So we're still dealing with the prevention side of this. And therefore, there's a lot of fear. Forget how scary it's going to be when different businesses start reporting lower guidance. Start telling folks, we don't have people coming into our businesses. You've got to go home and we can pay you for maybe 2 weeks. I mean, there's some scary stuff ahead. I don't say this to scare you, but I say this so you realize that I don't want you picking bottoms in this environment. I want you very, very cautious and very, very patient. We will put longer term capital back to work. I'll let you know when I think I'm going to start doing the same thing, and you guys can make that decision as to whether that's right for you. At the end of the day, gang, you've got to make that decision as to whether that's right for you. All right, so I hope I got that across there. But I'll share with you with as much transparency as I can what I'm doing. And then, again, you guys have got to make your own decision about these things. Also, know your cost basis. A lot of you are telling me, Rog, I'm losing a lot of unrealized profit. I get that. It's a terrible feeling. It is. But know where you own it from. Know what your time horizon is, and just don't let the panic out there infect you. If you knew what your time horizon is, you knew what your game plan is, we got to sit through this, right? And it's not a reason to dump those things. It's not a reason to add yet. Sometimes you just have to sit. All right. So having said that, we still want to focus on rips higher. I was tremendously disappointed that the massive historical action by the Federal Reserve did not result in more optimism from the stock market, because we would have shorted into that. I was looking for a rip higher and we didn't get it. So next time we get one, you better believe I'll look for a short. So in the meanwhile, what are we going to do? We're going to day trade. We're going to stay nimble. We're not going to commit to longer term overnight follow through. You're going to see that overnight margin with some brokers is going up. You're going to see day trading margin with some brokers is probably going to go up. You might even see some brokers pull day trading margin. You might even see, and I don't know if it's going to happen, I have no clue, maybe they close the stock market. I think on some of your trades, start taking some profit, even think about getting flat as we progress through the week, especially if you have the March 20 expiration, all right? And then we're going to day trade, and we're going to likely day trade using the same thing we've done for weeks, which are options on the futures and options on the ETFs. And we're going to talk a whole lot more about currency trading. We've been talking about the yen as sort of a touchstone to understanding our directional bias in an environment where clearing range and even initial balance ranges have not been reliable to determine that initial, that directional bias, right? So we've moved on to another tool, the yen. We have now no really reference historically for the kind of volatility we're seeing right now. So HPMRs are out the window. Even though I updated them, you'll notice we're still trading way beyond them. So what have we done instead? We're relying on volume weighted average price and V-score and volume related tools, volume related. And so this is where we want to pivot, not be scared, but realize what can we measure this market with, what is unrealistic to measure this market with right now, and how can we be proactive and keep from panic. Now, if you guys have questions, and I realize there probably are, you guys are my members, you guys are the ones putting in the work, you guys are the ones putting in all the study and the blood, sweat, and tears, and I get it. So I may not be able to, because I literally have hundreds of emails in my inbox right now that I try to get through every single day, little by little. But do send me your questions, because they are inevitably going to make it into conversations in the chat room and these premium and free videos. So do send them to me, let me know, and I'll do my best to address them individually, but also in the rooms. Anonymously, clearly, I won't, say names, but if you have questions, let's tackle them. And the one that I tackled, hopefully, as directly, because you guys know I'm not going to mince words with you, as directly as I could is, no, gang, we're not at a bottom yet. And I've given you the reasons why, macroeconomically, even from a standpoint of just psychologically. All right. So let's think about, if we're going to be aggro, how do we take advantage of the flow we're seeing now? Okay. I want to empower you to always have a plan B, C, D, right? So let's keep moving forward, and I'll see you in the next update.